Let's get started then. Good afternoon, everyone. My name is Belinda Brown. I'm the Finance Director here at the City of Richmond. And this evening we have Antonio Benuelos, one of the accounting managers, Vernesia Ward, who is one of our budget analysts, and Bert Jones, who's one of our budget analysts. We also have one of the deputy city managers, LaShonda White, who will be all here and to welcome you and thank you for attending the first in a series of the community budget meetings. Now I'm going to turn you over to Antonio Benuelos to talk about the translation services that we're offering this evening.
Buenas tardes, más quiero avisarles que para las personas que quieren escuchar esta presentación en español, solo tienen que seleccionar el botón que dice Interpretation abajo de la página de Zoom. Al presionar ese botón, la presentación será en español. Okay. Back to you, Belinda.
Hey, you want to go ahead and start the presentation? So we're going to give you a presentation, and then at the end, we'll open it up for questions.
And you can see my screen?
Yes. Okay, so for this evening, our agenda is to give an overview of the budget, to talk about some budget highlights and challenges, which include the American Rescue Plan Act, ARPA, give you an update on the Measure U, which is the gross receipts tax, talk about management partners and the long-term forecast that we have, to review our revenues and expenditures, to go over next steps, and then we're opening up for question and answer session. So this is just our organizational structure. Next slide. Just to give a quick overview of the purpose of the budget and the document. It is a policy document. We use it for our financial plan, but basically the point of a budget is to create a plan that allows you to meet your financial goals. It helps you to plan, organize, track, and improve your financial situation. So that's the overall purpose. Our budget goals have remained the same. It was and still is to obtain a structurally balanced budget, to preserve our services to the extent possible, to consider the impacts of COVID-19 on our services, to minimize staff reductions, to increase our cash reserves to the policy level of currently 15% is the policy level, and which would also help us to maintain our bond ratings. So for the budget, the decision-making process, our annual budgets are initially developed with input from all departments. We have review and input and revisions that are made through a series of internal and public meetings, such as this one this evening. And then ultimately, the City Council makes the final decisions regarding budget allocations. During the budget development, we start off with the budget kickoff. That is where the budget team goes. We meet with city staff and department heads, kind of give a little overview, and then they are able to input their budget during a 2-week budget input window. We go through a series of budget hearings where we review the budgets and make sure all the information is inputted as requested. And then we also have several council meetings where we talk about the budget, community meetings, and union meetings. So some of the budget development key dates. Our kickoff that I talked about, that's this year we started that on February 17th, and then we also had the budget input training, which was on the same day. We asked that all departments submit their personnel position control reports, and those were due on March 5th. The input window, which is the time that departments are allowed to or able to enter all of their budget requests, happens between February 22nd and March 7th. We started our budget hearing meetings on March 17th, and those will run through tomorrow. We have 3 so far as scheduled meetings for the community, one being this evening, which is April 7th. And then we have another one on Thursday, May 6th, and on Thursday, June 3rd. We take our first draft of the budget to council on May 4th. We have several meetings with the unions regarding the budget, and then we go back to the council with budget updates from the first May meeting through June, and would ultimately have an approval of the fiscal year 22 budget prior or no later than June 30th. So some of our financial highlights. For the last 6 fiscal years, we've ended with surpluses. We've been able to maintain our credit rating upgrade. We've had a decrease in our total negative cash balances that we had. The voters adopted the Measure U gross receipts business tax, which will bring more revenues into the city. We've updated our long-term budget forecast. And then we also have received or will be receiving some financial assistance from the American Rescue Plan.
I'll go quickly over the Measure U, gross receipts business license tax. This is a tax that was approved by the voters back in November. Right now it's scheduled to go into effect July 1st. This really changes the methodology used to calculate the business license tax. Currently, it's based on number of employees. So there's a base rate of $234, and it goes up based on number of employees. So the more employees you have, the higher the tax. This new methodology changes that from base employees to gross receipts. Gross receipts meaning all the revenues that are generated for a business. And from that total gross receipts, a certain percentage is charged. The way we have it here in Richmond is going to be based, the actual rate will be based on a couple of different things. First of all, it'll be based on the category. So if you're a grocery store, you have one set of rates. If you're a car dealership, you have a different sort of rates. If you're a manufacturer, you have a different sort of rates. Additionally, the rates go up based on the volume of your gross receipts. So a business with a higher gross receipts within the same category as a small business in that category is going to have a higher rate. And so but it has that level of complexity. Additionally, the ordinance includes a minimum tax. So for small businesses that make $250,000 or less, they pay the minimum. They pay $100. So currently, with no employees, you are paying $234. If you're making, doesn't matter how much you're making. If you didn't have any employees, it's $250. Now, as long as you don't make $250,000 or $250,000 less, you'll be paying $100. For a lot of businesses, this will be an actual break for them. It's estimated to bring an additional $5.3 million for the city of Richmond. That's on top of what we currently bring in, which is around $3.5 million. So this will generate more revenue for the city of Richmond's general fund. Currently, staff is working with various stakeholders on various items in starting to set this new license up. It's a couple of items that we're working on definitions and interpretations of the terms within the ordinance. And of course, we're working on an implementation plan. Okay. Something else, another highlight, I guess, for the city, we've updated a long-term budget forecast. The city has done forecasts for over 10 years now, starting really in 2010. In 2015, Russ Branson came on board and developed the existing long-range fiscal model, and he maintained it for the city through 2020. The May 2020 forecast showed a structural deficit made worse by the effects of COVID-19 pandemic. In September 2020 update, it incorporated fiscal year 21 budget adjustment, but it still showed significant ongoing budget shortfalls through fiscal year 2027. Management Partners actually was hired by the city in November 2020 to develop a fiscal sustainability plan. It included analyzing the city's financial forecast. So it's second opinion on what the previous assumptions had been made of. So a second review. Additionally, management partner was hired to prepare a forecast dashboard decision-making tool, which makes it easier to the existing model to use that for the city staff or really anybody who wants to play with the different scenarios to see what happens. And LaShonda will do the next couple of slides, I believe.
Yes, good evening, everyone. LaShonda White here. I have the privilege of sharing information about the American Rescue Plan. So the American Rescue Plan was approved or signed by President Biden in March, and it's a $1.9 trillion rescue package. There are a number of things that are included in this rescue package or relief plan. It provides funding to state and local governments like the city of Richmond. It also provides funding for education and transportation, capital projects funds, homeowner and emergency rental assistance, small business support, and then it provided additional funding to individuals through expanded tax credits for children, stimulus checks, and expanded unemployment benefits. For the city of Richmond, we are expecting an allocation of $20.81 million, and we are excited about that. And the funds will be received in 2 equal installments that will be 1 year apart. So right now we're estimating that the first installment will come, which will be 10.4 million will come, we're thinking around June, July of this fiscal year. And it will be available for us to determine how we want to utilize it for the next fiscal year budget, which is the part we're developing that now. And then that second last installment, the final one, will come in a year later in 2022, and we'll be able to use it in the following fiscal year. Per the rules, the $20.81 million has to be spent by the end of December of 2024. So we have about 2.5 years to be able to figure out how we want to spend it and to spend all of the funding. We will have to provide reporting to the Treasury Department, and we are still waiting on some specific guidance from the federal government on uses and different rules and regulations surrounding the funds. So some of the uses of the funds include for local governments, we can use it to respond to the COVID-19 emergency and address some of its economic impacts or effects. So that could be on the revenue side. So we did have some revenue losses comparing fiscal year pre-COVID to now. We've had revenue losses, so we can estimate what those are and use some of the funding to help cover and offset that. We also can use it to help bring back and restore some government services that were cut or reduced due to the pandemic. There is a provision in there that will allow us to provide some premium pay to essential employees. And we also are able to use the funding to make investments in some infrastructure. What we cannot do is use these funds towards pensions, but we are able to not only support government services, but we can transfer funds and provide support to individuals, small businesses, nonprofits, et cetera. In terms of, I just want to share about, before I pass it on, about the timeline and how we want to get input from the community. So this is we presented information last night at City Council, and this is another opportunity tonight for us to share information about the American Rescue Plan, because we want to get feedback from community, from different stakeholders on ideas about how we can spend the money within the framework, within the regulations that have been provided to us. And I share what some of those are. So we want to gather information and input. We can do that tonight after we do our presentation. Will be opportunities for people to share. But I just want to let everyone know that throughout the month of April, please be looking out for information. We'll be sharing ways for you to provide additional feedback through a survey, by providing information and input online, going to other meetings to provide information. So just be on the lookout for that. And in May and June, we want to be providing information back to City Council to hopefully come up with an expenditure, a plan, a recommendation for how to spend this money so it can help us in the fiscal year 21-22 budget development process. And with that, I will turn it back over to finance staff. Thank you.
So now we go on to our financial challenges. COVID-19 is up at the top. However, as LaShonda just talked about with the American Rescue Plan Act, hopefully we will be able to mitigate some of the challenges that we had due to COVID. That was in our budget for this fiscal year and the tail end of last fiscal year going forward. We still have rising pension costs, unfunded deferred maintenance and improvements that are needed. My reserve level is currently below policy. I think our last update, we were at 13%. And then we still have some negative fund balances that we need to cure. So our updated forecast, it has improved from in between Russ Branson's forecast and Management Partners due to some changes when Management Partners came on board. The Measure U had passed, and so that was able to be added to the budget forecast model. And then there were some other assumptions that were revised or updated just based on what we knew at that time.
I'll go over some of the revenues and expenditures that the city received. This is a snapshot of the general fund at mid-year. So our mid-year budget for revenues was 176 million. Of that 176 million, about 76% is from three main revenue categories: property taxes, sales and use tax, and utility user tax. The other bigger segment is other taxes, which is a little larger this year compared to other years, primarily because of one revenue stream, documentary transfer tax, which is a tax on the sale of property within Richmond. So it's a one-time charge when a property changes from one property owner to a different property owner. Voters in Richmond approved a new tiered tax structure a few years back, where property selling for $1 million get charged a little bit extra than all those selling for under $1 million. So that has impacted significantly this year's revenues for that one category. The other revenue includes charges for services, fees, parking tickets, and other revenues along those lines. It's really a combination of a lot of small revenues. And operating transfers in is when we have excess funds in certain non-general funds, the city can transfer, under certain situations, transfer that money to the general fund. And that's what we have this year. And this is a snapshot of the different revenue categories through period 8. So this is where we stand. Last time we did an analysis, we were supposed to present this last night to City Council. So year to date, we're at $109 million. The budget is $175.7 million. We're at 62.5%. Ideally, in a perfect world, if we get everything in equal amounts every month, we'd be around 66.7%. Even though we're a little bit below it, that's actually pretty good for revenues. Usually we're a little bit behind and catch up only after the end of the fiscal year with certain transactions we receive from the state after that correspond to this fiscal year, but we get it after the fact. So the 62.5 is actually pretty good. And I'll go a little bit more detail on the main revenue categories. So one of the bigger categories is property taxes, and within property taxes, one of the more important sections is the tax we get on assessed valuation. So every property in Richmond gets charged property taxes by the county, who collects it for the city of Richmond and remits it to us. So if a house is worth $1 million, there's a Prop 13 limit where the county can charge 1% of the value of the property. So that's the purchase price plus an increase set at 2% every year. So if property is bought for $1 million, the tax is $1,000 per year. But Richmond doesn't get that full 1%. It goes up to different things. Half of the 1% or $1,000 somebody might pay would go, half of it almost goes to school districts. 13.7% goes to the county for their services. Bonds and other things go to 9.3%. Of that 1%, the city of Richmond gets 28.5%. And this is to pay for general city services, for police services, for fire services, for libraries, for anything that's paid out of the general fund. Another important category is sales tax. Right now, many of you might not be aware, but the current sales tax rate in Richmond is 9.75%. It actually went up 0.5% this past April 1st. Voters in Contra Costa voted to pass Measure X, which is a county-wide 0.5-cent sales tax that goes to the county for essential services. The county will get all that money and divvy it up how they see fit. In Richmond, though, we do get part of the 9.75. Every city in California gets 1% of the state base of 7.25%. That's called the Bradley-Burns sales tax. Additionally, voters in Richmond voted to increase the sales tax twice, once in 2005 and again in 2015. So that's another full 1% that comes to the city of Richmond. So the total of 9.75%, really only 2% of that 2% of that 9.75 comes directly to the city of Richmond. The rest goes to the county, to the state, and to various other agencies. In Richmond, we have a utility user tax, and it gets charged on various different utilities, and it's at different rates for each utility. This is a voter-approved measure. For example, telecommunications, you get charged 9.5%. For prepaid wireless, that's 9%. For video, cable, that's 5%. And for gas and electricity, 10%. Additionally, within this revenue category, there is a settlement with Chevron where they're currently paying $4 million. They'll be paying that to the city of Richmond for the next couple of years, and that important revenue stream will go away. Also in our ordinance, we have what's called the cap provision. That's if any particular company person does not want to pay UUT on actual, they can pay what's called the cap provision. When they do that, we can't audit their record. We can't really look at what they're generating. Currently, that amount is $24 million per year. Only one company uses that cap provision, and that's Chevron. And that amount goes up every year based on the consumer price index for a very particular segment that's published by the federal government. And how does the city spend its revenues? So for fiscal year 2021, general fund receives 176 million. Of that, 42.5 actually goes to salaries and wages. Another 34.3% goes to benefits. So as you can tell, the majority of the revenue is actually spent on salaries, wages, and benefits. Other expenses include professional administration, which can be contracts for services, utilities, and things along those lines. But the vast majority of the expenditure for the city is salaries, wages, and benefits, so the actual people. Here's a more detailed breakdown of our expenditures. Again, the first two lines are the salaries and wages and the payroll. And this is a snapshot for period date through February for the current fiscal year. For this, we're at 64%. Unlike revenues, expenditures are a lot more cyclical. So every month is very close to what you would expect. You don't have big swings based on one payment. This pretty much goes out in every month. For this, for the expenditure side, the threshold should be 66.7%. We're at 64%, which is actually pretty good too. Being below it is a good sign that you're going to, at the very least, be close to the budget amounts at the end of the year. Looking at the expenditures in a little bit different way, what departments, what services do we most spend on? Public safety is by far the highest one. Public safety includes police services and the fire department, close to 60%. Public works makes up another 15%. So culture and recreational services, 7%. And general government, 20%. General government includes services like human resources, finance department, information technology, that sort of stuff. A quick little snapshot of where we started the year. So last summer, we adopted a budget at 165 million. Based on changes we saw in the first 6 months, we increased the total revenues to 175.8 million. The bulk of this increase stems from the documentary transfer tax. In Richmond, we had several large sales that brought in a lot of money. So about $8 million just from that one revenue stream was above the budgeted amount. So we were able to increase the revenues and and better capture the expenditures. If things work out exactly the way, which they rarely do, that will lead to a surplus this fiscal year of 4.1. I mean, that's something we're going to keep an eye on, see if it actually pans out that way. We still have several months of revenues and expenditures to go through for this current fiscal year. For all funds in the city of Richmond, the total revenue brought in for the city is $366 million. Again, the general fund is the one most everybody hears about because that's what pays for police, that's what pays for firefighters, that pays for most of the services most people usually need. But there are several other funds that have them important for the city, and all put together is $366 million. Special revenues, internal service, those can include the port, it could include wastewater, it will include several other services provided by the city that are treated a little bit separately from the general fund, but obviously still need to be tracked and managed by the city.
And then here you see our staffing levels for the last 10 years, starting with fiscal year 11-12, our total head count, full-time employees was 804. And you can see it's broken down also between sworn and non-sworn employees. And then fast forwarding to this current year, fiscal year 2021, we have a total count of 679, with the breakdown of sworn being 245 and non-sworn at 434. Next slide, we go through the budget calendar for some important dates to remember. We're on April, which is April 7th, where we're talking about the community budget meeting, which is this evening. And then sometime later this month, we should have some council workshops and community workshops to discuss further the city's budget forecast and the dashboard. And then in May, we take our first draft for the fiscal year 22 annual budget to council for review. We will definitely have another community council meeting, and we will start the department presentations starting with the May 18th council meeting, and then run those through. We'll also have a fiscal sustainability update sometime in mid to late May, and then in June, continue through with the budget presentations and discussions, another community meeting, and for final approval of the budget, hopefully on June 22nd. So our next steps, staff is working and preparing the budget documents for the May 4th council meeting. Our next community meeting will be Thursday, May 6th at 4 p.m. And then staff will continue to bring updates to the council to every meeting until budget adoption, and final with council to adopt the budget in June. And so this page is a list of our resources where our presentations are located, the budget documents, our comprehensive financial reports, and the website for the Richmond Financial Transparency. So that concludes our presentation for this evening, and we're open for any questions or comments that you may have.
If you'd like to ask a question live, just raise your hand. And if you're a phone caller, all you have to do is *9 to raise your hand. And then when it's time to talk, *6 to unmute. Lisa Cody, you're first. You may begin to talk.
Thank you very much for this presentation. It was very thorough. Will we be getting a copy? Will this be publicly available on a webpage?
It will be on the finance webpage.
Okay. So you had mentioned, Belinda, that the reserve was, you thought, at 13%. I was under the impression it was more like 14.3 at this point. What is the current reserve emergency or reserve balance in the general fund?
I believe we're at 13%. I have to go back and look at the number. Bert or Vanessa, do you have that information readily available? Otherwise, we'll have to get back to you on that. I believe we ended last fiscal year at 13%.
Right, you've gone up, I think, right, at this point. At least I thought there was maybe an update since then that was more, for some reason, 14.3. What's the actual reserve balance right now?
We'll take a look at that, Belinda.
Okay, thanks.
Oh, okay. Again, I would just wanted to clarify. I know I've just never gotten clarity in my own head about the negative cash balances. The CAFR states clearly that the negative cash balances in the R Transit and engineering cost recovery funds have been cleared. And I know that you've said that that's not the case, that the engineering and cost recovery still has, I believe you said 2.9 million, something like that.
So there was a portion that was cleared with part of the reserve at the end of last fiscal year. It wasn't the whole amount. It was a portion of, I believe for engineering cost recovery is 134,000 or something like that.
Okay,
but it was
so
not the full amount.
It was not cleared. Okay, so I would say, okay, so the auditor essentially that's an incorrect statement in the CAFR. Just because I just want to make sure that's, because I know we'd asked you this a number of times, and I believe you that the number is that you have the, whatever, 2.9 minus 134,000. But just to be clear that the CAFR certainly makes it seem though as that number has been cleared. And I think that's why there was confusion in the council meeting, because the auditor had actually said that in the meeting, that the engineering, all the negative, like that the engineering cost recovery balance had been totally clear. I think that's where the confusion was. I have a question about it seems the number of payroll police has gone down significantly from last year to this year. It's at, I believe the payroll on Transparent Richmond says like 176 full-time positions. And that's not involving the actual 31 frozen vacancies. So were there a significant number of people like go, or did they retire or something? Because the payroll shows a significant drop.
You said it does not include the vacancies. I mean the frozen.
No, it doesn't.
positions?
It doesn't, right? So even if you take, so is there 248 vacancies, and that went down to 216, right? So that's the whatever it was, the number of vacancies that you removed, but you actually had 206 payroll full-time employees, and you lost. It went down to actual payroll employees, not FTEs, payroll people. 176 on your webpage. So I'm just wondering, like, how is that? I know you didn't lose 30 police officers or 30. So I'm trying to reconcile where those, because that's not FTEs, that's actually paid people on your webpage on the Transparent Richmond. So I was trying to reconcile how the vacancies changed over the year with the actual number of sworn and unsworn police, and it looks like you've actually lost, like the payroll went down. Can you explain that?
No, I would have to look that up because I'm not sure what you're citing right now.
Just straight when you go to the there's a payroll, Transparent Richmond payroll, like, and you can just look at the number of cops or the number of sworn and unsworn employees in the police department for the city of Richmond in this year. And in 2021, and it says 176. And last year it was 206. And these are payroll jobs. These are not frozen vacancies, unfunded jobs. So I guess it's an outstanding question. I really understand what happened there. Let me see, what other questions? Negative fund balances. Yeah, no, for the moment, that's it. I'll let other people ask questions. How many people are on this call, just out of curiosity? Not including staff.
There's around 19.
19, okay.
Great, thank you very much, Elisa. Our next caller is Randy Joseph.
Hello, everybody. Thank you for that presentation. I have two questions. My first question is, in the later meetings, are you going to specifically talk about different departmental budgets and the breakdown of like the increases or decreases in funding for that? And the second question is about the participation, because I know a lot of people tried to register on through email to get a link to the meeting, and nobody got an answer from them about where the link was for this meeting. So that was really difficult to get into this meeting because we never got an answer after we registered through email. So is there a way that that's going to be follow up to be better maintained so people can come to the meeting? And then my first question again is, are you going to go into specific departmental budgets at the later meetings?
So yes and yes. So on the first question regarding giving more detail about departments, we will, at the next meeting, we should have all of our numbers compiled for the proposed budget request, and we'll be able to then give more detail, and you can have questions for that. And as far as the link, my apologies for that. We will definitely work to get that those kinks worked out, because we do want people to participate in these meetings and be able to have time to listen to the information and have time for questions.
Okay. I appreciate that. Thank you very much. Those are my questions.
Thank you.
Thank you, Randy. Anybody else would like to ask a question? Raise your hand. And Lisa Cody wants to ask another question again. Lisa, you're live.
Can we discuss, I guess, some of the management partner stuff, or is there a different forum for that?
If we can answer those questions, but they will be coming back with some additional meetings for the community. Is that correct, LaShonda?
So yes, we're trying to work with management partners to see when's the next time that they are able to return to city council. But if you do have questions, like Belinda stated, we will do our best to answer those. And if we can't, we will take note of them. And when management partners comes back or through a FAQ process, we should try and answer those questions for you.
Okay. I guess, well, I don't know how familiar you guys are with their models, and what they use, but like things like the 2.4 million in vehicle replacement. Right now, I think you guys spend about an average of 1.14 million. It goes up and down a lot per year, but is there a way for them to provide a little bit of a detail on, or can you, on their assumptions and how they made them? In other words, what vehicles are, needing to replace that often that you just spend $2.4 million per year? And the same would kind of go with, the 2 million CIP. Is that, you guys have actually, it would be good if you guys could go into an explanation for the group of how you fund capital improvements in general. What are your revenue sources for capital improvements, your tax sources, your grants, your general fund, because it does look like you're going to be wanting to do a $2 million CIP from the general fund every year. And, when I look at the budgets for capital outlay every year, you budget really high, and yet you spend very little of it. So you budgeted, for example, just any year, 2018, the original budget was 22.9. You revised it up to 64.8 million in mid-year. And then the actual spend was 43 million, and 23 of that was depreciation. So the actual money spent was 19 million. So you revised the budget up to 64 and you spent 19. So can you explain kind of how, and that's kind of a similar trend, same thing in 2019, 61 million in a revised budget, 39 in the original, and then the actual spend was 13 million. So, and depreciation, again, the depreciation is about 29 million every year, 23 million, 26. So how, that's a small percentage of the actual budget that you're putting out being spent. So can you explain sort of the difference in the original budget and the revised budget, and why it jumps by 30 or so million each year? And then, or sometimes 40 million, and then why so little of that money is actually spent on a yearly basis? Just to explain sort of how you fund your CIP.
Yep. Vanessa, you want to give a little background on the CIP budget and funding sources?
Sure. Hi, this is Vanessa Ward, budget analyst for CIP. And basically we have a budget, we have special funds for projects, and those funds are for specific purposes. Like we have gas tax that can only be used for street and road projects. And we also have Measure J, which is another tax, and that's also for street and road projects. So we can't use that funding for buildings and things of that sort. It has to be street and road related. And then we also have other funding for the grants, and all the grants are identified for whatever they may be, for parks, or it could be for buildings, it could be for streets, but the grants are very specific in what they're funding. So we can't just take that money over to the general fund and pay for something else. It has to pay for whatever the grant has identified it for. And staff has worked hard to gather those grants. So all of the CIP has special funding. And what you see adopted is what we consider basically our new revenue. And when you see the jump, that is for, we have projects that they carry over more than 1 year. So you might see the 30 million right now, then you might see another 30 million. Well, that's because they have contracts and things that were encumbered throughout the year, but the project was not completed. So when we close out our year, like we close out 1920, then we have to roll the balance of the contract over to the next budget so they continue to do the work. So that's where you see the big jump of $20, $30 million, making it go up to $64 million. And that happens every year. So it just depends on, they spend more time often with the design phase of the project and going out to bid and getting those things in order. And then once the construction phase starts, it usually moves along a little bit faster. So that's when you'll see more of the money being spent towards the end of the project phase. So, and if they haven't completed the project, we just rebudget it again. If they had 100,000, they didn't do anything with it, they still plan on doing it. So we just rebudget that. It doesn't, we can't take it and use it for something else. So we just rebudget it for the same thing. And that's trying to address most of our street issues, sidewalk issues, ADA issues on sidewalks, parks, things of that nature. So that's where the CIP funding comes from. Well, that's where it comes from, and that's what we spend it on. So it may look like it's just sitting there, but there is a plan for it. When we adopt the budget is the first year, but the plan is the 5-year plan. If you look at the capital improvement book.
Okay.
Then can you tell her on average how much general fund dollars are actually moved from general fund to capital to help cover capital projects?
On average, we try not to use general fund dollars for capital improvements, but then we do have some things that are emergencies, roofs and things of that nature that have to be addressed right away. So that maybe 600,000 here or 500,000 there, but it's never just planned to use $1 million of general fund. It just something's come up and we have to take care of it at that point. If a roof is leaking and we don't address that can ruin the whole building. So that becomes an emergency and we use general fund money for that. But on average, I wouldn't say we have a standard average for general fund dollars. It's on an as needed basis.
Go ahead. Sorry.
Now, several years ago, Vernacia, general fund dollars were actually budgeted, and I believe it was one-time monies. I'm not sure what the sources were, but there was some constant flow of general fund, correct? I mean, this is many moons ago, but it did happen. Yeah.
So you're right, Belinda. At least your Transparent Richmond page shows a regular flow of anywhere from 6, 7, 8, 9 million every year to the capital improvements department. And then also to outside capital improvement fund. So there was two. So I know that you dissolved the capital improvements department. It seems it's not listed anymore. Is that,
It's not
It's
dissolved.
under Public Works.
oh, it's under Public Works. Okay.
We're-
Okay.
And that money that you're referring to, it wasn't 6 or 7 million. It was a lot less. And it was a transfer from an overage we have for pension tax override. Some funding we were paying for ourselves. We were paying ourselves something, and overage came to the capital plan. And on average, that was about $3 million a year. And that stopped probably, say 8, 9 years ago, maybe 10 years ago.
Okay, so I'm confused. So there is money in on the Transparent Richmond page when you go to look at the capital improvements department that gets a transfer from the general fund every year. And it is not a couple $100,000. It's more than that. And also there's a transfer out from the general fund to capital improvement, the funds outside of the capital improvements department. Like, so there's two. So I'm confused what those are. If they're not for capital improvements, what are they for?
I would need to see what you're looking at, because I'm not clear on what you're referring to.
Okay, I'll pull it up. I don't know if we're allowed to share, but
If you can
Sure.
maybe email me.
Sure. If you want to mute me, or I'll mute me.
Yeah, I'm just curious to see it because it's not
Yeah.
a regular transfer. So
Right.
Yeah, I'll pull it up and then we can look at it.
Okay, great, thanks.
Sure, of course.
You want me to bring her into the meeting?
I'm not ready yet. I have to go on the webpage and find it.
So she can send it to me private, I guess, on this thing here.
Yeah, let me just get it.
And I know we only have scheduled an hour for this meeting, if I'm not mistaken. And so I want to make sure to see if there's other questions in the Q&A or if there's other attendees that have questions that we can answer during our time.
There is questions on the Q&A for the budget staff.
But can I answer another question real quick since I'm on here, Belinda?
Yes, and then Lisa, we're probably gonna run out of time. Can you email me what you're talking about, and I'll make sure that Vanessa gets a response to you for that.
Of course.
Vanessa, you go ahead and finish up, and then we have some questions from David Captain, and we want to get to
Okay.
those.
Of course, Linda, I'll email you.
I just
Thank
looked up the reserve balance from our mid-year report.
Mm-hmm.
Our projected cash reserve is 24.5 million or 14.3 of total expenditures. So that was about 1.2 million below the 15% minimum. That's what we reported during our mid-year report for the reserves.
Okay. Bert, do you want to do the questions? Are you able to do that?
Let me see. Oh, so just go ahead and type the answers?
No, the Q&A, you can read them out aloud.
Okay, the first one is from David Captain. How much are you budgeting for outside environmental consultants for AstraZeneca and Point Melody? And the second question is, how much are you budgeting for outside legal services for AstraZeneca Point Melody?
So I know I believe Lena is on the call. I don't know that she'll be able to answer that at this moment, but Lena, do you have any
Idea?
anything to add on that one? If not, we can, we're going to be building a FAQ page so we can make sure we respond to people's questions.
I don't have specifics in terms of exactly how much, and I think a lot of it depends. But I know there's certain legal fees in terms of that the applicant has to pay. So while we may be budgeting, those are pass-through fees that the applicant will pay because they're required to indemnify the city on any approved project approvals. But there's also enforcement costs related to our development agreement. So there are some city costs that we would have to do, but that's something I can follow up with the city attorney's office on.
Thanks. Bert, you want to go to the next one?
Okay, next question is also from David Captain. Is there an up-to-date Richmond housing assessment of the specific needs of Richmond residents? If not, is there a budget item for either making an assessment or updating the existing one?
Belinda, I can partially answer this. So the City of Richmond is required to update its housing element every 8 years now. And the new planning cycle for the regional housing needs assessment is coming out soon. And we're required to update our general plan, our housing element, which is a part of the general plan, by January 2023. So we have applied for grant funds from the Association of Bay Area Governments. They're known as REAP funds, REAP, which is regional planning funds, to do our housing element updates. So we are going to be looking at housing needs within the city. I don't believe we'll do a full housing conditions analysis, but a lot of that will just depend on funding that we are able to obtain for this effort.
Okay, the last question is from an anonymous attendee. How many participants are in the meeting tonight? Thanks. I can answer that one. 33 participants at this time. And that was all the questions for tonight.
Okay, so we would like to say thank you on behalf of the Finance Department. Thank you for attending the community meeting, and we will definitely make sure we do a better job at making sure that the link is posted well in advance and where you can see it so it's not so difficult for you. We will, as LaShonda said, be building a FAQ on the website, so we'll be able to post all of the questions and responses so that you can always see that. And the presentation will also be posted on the finance website for the community meetings. All right, thank you, everyone. Richard, thanks for staying with us.
Thank you.